Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajshekar Kongari, Equity Research Analyst, part of Market Smith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Yesterday was a very historical day for the Nifty index. It reclaimed its 200 DMA and 50 DMA. It was up almost 2% in the yesterday's action. Broader market indices also showed good momentum in the yesterday's action. Prior to that, Nifty traded around its 200 DMA. It tried to reclaim its 200 DMA more than a couple of times, but it failed to reclaim. However, yesterday's action was very good. It was successfully reclaimed 200 DMA and 50 DMA is also reclaimed by the index. Next, going forward, 100 DMA is might act as some kind of resistance where Nifty might trade in a again consolidate around 100 DMA for a period of week and then look for fresh momentum. On the downside, again, 200 DMA is going to be a crucial level for the index. From the O'Neill's perspective regarding market status, we changed the market status to confirmed uptrend. Yesterday's action was considered as follow-through session because of huge momentum in terms of price and volume was also higher than the previous session. Going forward, we'll be looking out for stocks which are breaking out from their base patterns. Once the market status is changed to confirmed uptrend, you'll see lots of stocks breaking out from their base patterns, and the probability of those breakouts being successful will also be on the higher side when the market status is in confirmed uptrend. On the downside, if the recent low is breached, or if there is an accumulation of distribution days from here, again we will be changing the market status to under pressure. But given the situation currently, and we have changed the market status yesterday itself, it will take at least a period of 1 or 2 weeks to see if there is any distribution in the index. Coming to the stocks which are under radar are expected to be under radar in the today's session. Starting with NHPC, which is received an payment of 250 crores of rupees from insurance company under mega insurance policy. This was regarding a loss the company has occurred due to a flash flood at its power station. Biocon's arm has received an approval for tacrolimus capsules in China. These capsules are used in conjunction with other medicine regarding transplant of organs. So there is a very good market share for the medicine in China. DMart has come out with December quarter business update. During the quarter, the revenue was up nearly 17.5% in terms of year-on-year basis. Maharashtra Bank has also come up with the business update. The total business for the quarter was up 17% to 5.08 lakh crores of rupees. Advances were up 21%, and whereas the deposits were up 13% year-on-year basis. Yesterday, both FIS and DIS were net buyers in the Indian market. That can be contributed to the huge action on the Indian market benchmark indices and other broader market indices. FIS were net buyers of around 22 crores of rupees of Indian equities, whereas the DIS have bought heavily. They have bought more than 1,500 crores of Indian equities. Coming to the global market update, US market closed in the negative territory overnight. It closed around 0.2 to 0.3% lower. Asian markets, Shanghai is trading with a decline of 0.4%, whereas Kospi is trading with a very good gain of more than 1.9%. GIFT Nifty is indicating a muted opening for the Indian markets. And given that US market closed in the negative territory and Nifty trading around its 50 DMA, We might see some consolidation around 50 DMA and 100 DMS going forward, and Nifty might trade in that range as well. The chart of the day, we picked Welspun Enterprises. This stock was added to model portfolio yesterday. It was a very good stock in the current market. It broke out on a very good volumes. It is very strong breakout, and the base formation has been very ideal. If you look at during the fall, the volumes have come down, which is a positive sign. And during the right side of the base formation, the volumes picked up, indicating accumulation. The same can be seen by looking at the A by D rating, that is A plus, which is the highest rating. It indicates that huge accumulation has happened in the stock recently. Another key technical parameter is the price strength. You can see that RS line has improved heavily and it has formed blue dots consistently, indicating very good strength in the stock. EPS is around 70, which is considered good enough for us to add to the portfolio. Number of funds section needs to improve. There was a slight dip in the June quarter, but September quarter was very good. It improved. So overall, on many of the parameters we look at are looking very good from the O'Neill's perspective. Hence, we have added this stock in the model portfolio, and it is still trading in the ideal buy range. You can if you are looking for fresh positions, you can definitely consider this stock for addition, and also be watchful in terms of volatile action. We'll be looking out for stop loss level as well. Thank you for joining today's pre-bill. Have a good trading session.